The reality is they never cut 50 basis points unless we're in kind of a so-called crisis. And I think that's the way they're viewing things right now. They're scared. I think it's bigger than any kind of financial downturn in the equity or bond markets. I think a solvency crisis is because it permeates everything, is the biggest issue facing any administration and any investor for the next 10 years. That's really something we got to be prepared for. The only way to get out of it, and the only way they will get out of it, is to print their way out of it.
The presidential election is about 5 weeks away, and with a tight race, you're probably thinking to yourself, where can I park my money that will be safe if either candidate wins? I'm your host, Andrew Brill. We'll give you some insight into that coming up right now. I'd like to welcome Chris Casey, our partner RIA WindRock, back to Wealthion. Chris is the founder and managing director of WindRock. Chris, welcome back. How are things in Chicago?
Well, some decent weather. Things are great, and thanks for having me back.
Absolutely. So, Cubs fan, White Sox fan, I know baseball's over for Chicago at the present time.
It's tough to ask someone that when the White Sox just set a record in the modern baseball era for having most losses. I mean, the truth is, I'm not a big baseball guy, but enjoy going to games. But it's been a tough season on the South Side, that's for sure.
Yeah, but Caleb Williams and the Bears, things are looking up. I know they're 2-2 and in the basement, but 2-2 is respectable, and he's learning on the job.
This may be outside my area of expertise, but this is the first time, I don't want to jinx it, I've seen a quarterback where I thought this guy's the real deal.
All right. So maybe we're onto something here in Chicago for the Chicago Bears. But Chris, let's get into it. And I know that the presidential election about 5 weeks away, as I said earlier, but we spoke last time about what you would want to invest in or where you'd want to put your money if either one of these candidates won. I'm interested to know, where are we putting our money with either candidate? Because there's got to be some safe havens, and we can start with inflation. And I know inflation's not where the Fed wants it just yet, although they just started a rate cutting cycle with the 50 basis point cut. Are there hedges against inflation where we can put our money where it doesn't matter all that much up or down?
Yeah, I think so. And it's important to remember, especially with all the negative news, if you're looking at any of the signals about the economy, it's tough not to be pessimistic, right? So it's important to remember that aphorism that indeed it's a market of stocks more so than a stock market, right? There's always opportunities, there's always investments, but having said that, you definitely need to protect yourself. There are a number of things that we would think that would do well, regardless as who becomes the president in January. And I think the easiest one, or really the no-brainer, is to load up on inflation hedges. And I'm not talking so much about what's been done by the Federal Reserve and what will happen. I'm really more concerned about what the Federal Reserve will likely do. And the reason they're going to have to really intervene, forgetting about any kind of market downturn, forgetting about a recession here coming down the pike, really just look at the debt issue. So right now, to put it in kind of household terms, it's no different than if your salary was around $125,000 a year and you had $1 million in debt, right? Because that's 8 times the salary. And right now we have federal revenue of 4.5 trillion or so, and the debt's over 35 trillion. So that's well over 8 times. And so it's no different than that situation. When you look at it from that perspective, you realize no matter what people say about U.S. being a superpower, no matter what they say about the economic strength of the U.S. long term, the reality is that's a very, very bad situation. And the only way to get out of it, and the only way they will get out of it, is to print their way out of it. And so I'm more concerned about what the Federal Reserve will do next year. I mean, we already had interest for fiscal 2024 running at over $1 trillion a year. The deficit's over $2 trillion for this year. So not only is there no end in sight as far as prolific spending, but I think it's going to get worse. And when it gets worse, the Fed has to step in. So there's a number of inflation hedges I think everyone should embrace, regardless as to who's the candidate or the president, because I don't think they're going to be able to solve this in the next 4 years.
So they started the rate cutting cycle. The debt is what it is. And it's not, as you pointed out, it's not getting any lower. And we're servicing this tremendous amount of debt. But now bond prices should start coming down because the interest rate was lowered. Are we worried about inflation going back up?
I'm more worried about inflation being sticky for a while here. And it's really once we maybe get into next year, when I think the Fed really has their gloves off, that's when they really start embracing kind of a QE type mentality. That's what I'm really concerned about. That's when I'm worried about inflation. And, and today, by the way, I should digress for a minute and just remind people, especially with presidential candidate Harris out there talking about greedy corporations or what have you. I don't know why she thinks corporations got greedy in the last couple of years, right? They're, as far as I know, everybody in every corporation is greedy to some extent, right? So
It's about
but the
making
Federal,
money, isn't it?
yeah, right. And before we start talking about how the Federal Reserve, did a great job bringing inflation down, we should also remember they're the ones that brought it up. So let's keep that in mind with their actions here. I think they're panicked. So they clearly have started a rate cutting cycle, and the reason I think they're panicked is for a couple of reasons. I think over the last couple of months, the price action they've seen in financial markets, the stock market with Japan, I think has really spooked them. I think they're extremely concerned about the debt situation because the reality is they never cut 50 basis points unless we're in kind of a so-called crisis. And I think that's the way they're viewing things right now. They're scared.
So let's get back to our discussion. And look, I, I don't want to call them wars, but there's wars going on around the world that we're aiding in. So defense is a big thing. Is defense and look, the defense budget is what it is, and obviously that's a deficit spending part of the budget. Are there places we can put some of our own money that is sort of a hedge against all this inflationary stuff, or whoever's president, because whoever's president isn't just going to pull out of everywhere and say, no, 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 we're not helping anymore. We're still going to need to spend money on defense.
That's true. And it's not even a matter of what happens down the road, right? It's not so much to invest in kind of defense stocks or that whole industry. It's not a matter of being concerned about what will happen, meaning will there be another hotspot? Will there be a flare up with whether it's North Korea or with China or what have you? It's really, in my mind, what's already happened. And I think what I mean by that is most people don't understand the stockpile depletion that has taken place from the Ukraine, especially Ukraine, but also the Gaza war, right? Put some numbers to it. 155 millimeter shells, standard NATO shells that they're using extensively in Ukraine. A factory in the US may put out, let's call it 10 to 12,000 of these a month. Well, Ukraine alone uses that in 2 days. So it's going to, right there. And this is why you see it's on the other side too. You see how Russia is getting arms, ammunition from North Korea. They're using Iranian drones. Both sides are depleted, and it's going to take years to build that back up. So, as far as if you're going to look at just different sectors in the stock market, what should continue to do well, what has a long lead time of revenues baked in the cake, and I think defense is a good area to look at.
Right? Any special places in defense? Obviously, there's defense contractors. There's defense people who make the the ammunition or the munitions. There's also, I guess, companies that make the vehicles in which we use the munitions. So there's a long range of certain companies that are tied to defense spending.
That's true. On the other hand, it is fairly concentrated, and you see that with any what I would call parastatal industry, meaning that when your government's the largest buyer, right, that's what you tend to happen. So, yes, in America, arms manufacturing is for small arms is highly diversified. When you get the big ticket items, when you get to the production of, workhorses like the 155 millimeter shell, that is a little more concentrated.
It's almost tied to defense now because AI is a tremendous part of intelligence and helping to fight some of these conflicts. So, how big can artificial intelligence play a role in some of these hedges against, either candidate becoming president?
Yeah, I think the AI trend is here to stay. I don't think people, despite all the news, despite all the hype, despite what you've seen with the video stock going through the roof, I don't think it's actually been fully embraced or appreciated by the investing marketplace. Um, And part of it's just because people don't see the changes right away. They may see it in their Google search, right? But they're not seeing a lot of the behind the scenes work. And a lot of it has been done yet, right? So, for instance, let's just look at a couple different industries. Look at the law industry, right? If you're going to have an estate plan and you have a non-taxable estate, meaning it's less than 27 million for a household, a couple, it's pretty bread and butter what you need, right? You just need a few documents drafted. Those type of areas, those business service areas, whether it's tax accounting, legal, what have you, are clearly can be done better, more efficiently, and far more cheaper with AIs. And we haven't really seen that yet really take place. So there's a lot of possibilities just haven't uh, produced themselves or manifested themselves as far as interaction with people. But I compare it, for instance, it's like an Excel spreadsheet, right? How much productivity did Excel spreadsheets bring to the world? I mean, I remember because I came out of college in 93, literally having like big 12 column pieces of paper. You're adding stuff. You got to add it at the bottom of the page. And God forbid there's a mathematical error and you got to search through, countless dozens of pages to find out where it is. Well, Excel took care of that, right? It made everything far more efficient. The same thing is going to happen with AI. And we may just not see it right now because a lot of it's going to be behind the scenes. But that's a trend that I think is here to stay. It's just a matter of investing in it the right way. There's got to be a lot of industries that are disrupted, but there's a lot that will have a lot of opportunity.
How do we play that long term? The AI trend.
Well, it's kind of the pick and shovels mentality, which I think makes a lot of sense, right? You could go out and buy NVIDIA right now. I don't. It's by any measure, it's fairly expensive. You could do that, but I think maybe a better play is looking at some of the ancillary effects that you're going to see from AI. And one of those big ones is energy consumption, right? It's if you look at the projections of AI's impact on the U.S. electricity grid as far as its consumption, it could be right now it's probably 1 to 2%, but some people are predicting that could be up by tenfold, could be up by 20-fold by say 2030. I mean, there's predictions out there like that. So that is another way to play it. And there's other factors that introduce energy, but I think energy is a great kind of stealth AI play is the way I'd look at it.
It's funny, we put out a community poll on our YouTube page and asked where people are most bullish. And energy took the cake by 37%. Crypto came in at 23%. Tech came in at 24%. So the tech is on the AI side, and energy, obviously, because we're using AI, is a concern. How are we going to meet the demand for energy for AI? I know that uranium and nuclear, like mini reactors, have been talked about. I don't know if you've researched that at all, but how does the country combat this energy need right now?
Well, it's a real issue. And if we had a free market in this industry, it would not be an issue, right? Because that's what markets do. That's what industries do. They're able to adjust very quickly to new developments, et cetera. But the reality is that energy production is a very controversial area, obviously, in this country for a couple different reasons. And by the way, AI is not the only reason you would expect electricity consumption to go up. Obviously, there's electric vehicles. That trend will continue, maybe not with the rates that people initially predicted, but that certainly will continue. You mentioned cryptocurrencies earlier. Cryptocurrency mining already takes up around 2% of the U.S. electricity consumption. So these may seem like small numbers right now, but at the margin, they have a very, very big impact. And then combining all these other ones together are data centers, right? Data centers eat up about the same amount of energy. And if anything, you could look at that and say with AI, the data center creation and usage will go up on a similar scale. So normally it would not be an issue. However, let's look at the reality of where things sit today. And I think it's very telling that we had the 3 Mile Island deal recently with Microsoft, right? That's the first time you've had a decommissioned nuclear power station in the works to be recommissioned. And it's the first time you had a whole plant for nuclear power with one customer. Now, you could say that all plants have one customer, the reality is they're middleman, right? They sell it to a bunch of households, what have you. No, this is for Microsoft and their data centers. This is primarily for their usage. So that's very telling. Right now, nuclear energy accounts for less than 20% of U.S. Production. that could increase, but that's obviously a very long-term trend. But the short way to do it and the most environmentally friendly way to expand energy production is through natural gas. And each candidate, as we've seen, has very different views on that. But I think the reality will dictate policy more so than the candidate dictating policy going forward.
And it's a big. You're absolutely right. It's a big discussion on on both sides. One wants to drill like crazy, and one is not. Although softening on that view because of the energy demand. I think your point is very, very well taken. Is that the demand is going to dictate policy for sure in that respect. And I grew up not far from 3 Mile Island, and maybe that explains some of my quirks. But it's interesting that nuclear power, which was like you said, we decommissioned that power plant. All of a sudden, now it's like, okay, you know what? How can we do this? And the question is, how can we do it a lot safer? And I think that might be another area of investing is, places and ways to keep these particular nuclear power plants safe.
Probably. I mean, there's definitely, like, for instance, there's consulting firms on fire protection, all that kind of stuff related to big plants like that. Um, the good news is that nuclear power in the United States is inherently safe relative to, for instance, Russia, and it
Right.
all has to do with the feedstock where they're using different isotopes of uranium, and so the very fact is that, get too technical about it, but the modulator, the thing that regulates the actual uh, nuclear reaction, uh, is actually the same as the coolant, water. That's not true in Russia, where they use maybe graphite versus water for a modulator. So it's inherently safer, but I think this is a long term trend. We're probably not going to see new plants online for years. There's a new one, I believe, it's been approved for licensing in Georgia, but that probably doesn't take effect till next decade. So it's a very long-term trend. That's why natural gas, which already accounts for over 40% of U.S. Energy production, should continue and should grow as far as its share.
It's funny because here in New York City, they're trying to get away from natural gas because of, I guess, old pipelines play a part in that, and explosions and buildings crumbling that play a part in that. But natural gas seems to be the easiest and most accessible commodity, if you will. And let's talk about commodities a little bit because there's a lot of, with AI and the development of chips with racks and power that we need, there's a lot of commodities that have to go into those things. So is that a place to park some money?
It, I think it's so. I like commodities for a couple of reasons. Number one, just in general, they're cheap relative to equities. Historically, they've been cheap. One could look at commodities and be concerned about, for instance, a deteriorating Chinese economic situation, which should put some pressure on commodity prices. But I think long term, when you look at electric vehicles, you look at EVs, you look at AI, those are significant long term structural changes that should have a big impact on commodity prices for the foreseeable future. And the question is then becomes, which ones do you want? Um,
Right.
I'm not an expert on it, but this is probably an area where people want active management. I would argue that you probably want to look to certain commodities that are less abundant. And, like, so for instance, nickel. There's probably five major nickel sites in the entire world. And I think the last major one was Voisey Bay, discovered like in the early 90s in Canada, right? So there's stuff like that that's chunky, right? It comes online, it takes years to develop, and then you've got a whole bunch of it. That would be different from, say, lithium, which is a large part in a lot of different places and can be brought online fairly quickly. So I like commodities, but you just have to kind of navigate that minefield because some should do very well, others may not. I would also focus on ones that have more than one purpose. So, for instance, copper is very important for batteries. And when I talk about batteries, I'm not just talking about stuff that, car batteries, but also, down the road, we're clearly going to have large scale storage farms of batteries for renewable energy sources. And so copper is one to look at. It also is in all the wires, right, that have to be used to get electricity to where it's needed. So, looking at certain commodities, I would use that kind of criteria as far as looking at which ones may be the winners and losers. Losers.
This show is sponsored by BetterHelp. It's finally happened and was only 4 years in the making. The Fed has cut rates by 50 basis points. Yes, it was a little surprising, but maybe they see bumps in the economic road going forward. And maybe there are bumps in your personal economic road that are weighing on you. Or maybe there are other things that are on your mind, keeping you from thinking about all the good things in your life. It happens to all of us. We walk around with the weight of the world on our shoulders and look at others thinking their lives are perfect with no worries or cares in the world. Everyone has worries and things they think about all the time. You can't let those things get in the way of the fun things you want to do and explore, or the things you're curious about and want to tackle. It's why I speak to someone. It helps to ease some of the negative thoughts and gain a new perspective on some of the things that are floating around in my head. And believe me, there's plenty. If you need to talk to a professional or are thinking about giving therapy a try, give BetterHelp a try. It's easy, online, convenient, and flexible to fit your schedule. Just fill out the questionnaire, get matched to a licensed therapist anytime. Rediscover your curiosity with BetterHelp. Visit betterhelp.com/wealthion to get 10% off your first month. That's BetterHelp, HELP.com/wealthion. You mentioned China, and they're just pumping, I want hundreds of billions of dollars into their own economy. Could that help commodities? Obviously, their real estate building is going to wane. It has waned. They've built way too much, but there's going to be other areas where they're going to want to increase. So that could help commodities as well.
It could. It's a little bit more difficult to say. And you're right. They whenever you have government intervention, you have economic misallocation. We clearly see that in China. I just read somewhere that there's like 65 million dwellings which are just unoccupied, right? Just empty. Like there's no demand for them, right? It really
Sounds like
depends
commercial real estate here in the States.
it's very similar, yeah. So it really depends on how China introduces their stimulus. Like they already introduced a number of interest rate cuts. They've already introduced some bond buying initiatives. But what's kind of the next steps? And because there's such a strategically focused industrial command type economy in a lot of ways, for all I know, they may dictate increasing the supply of copper, right? And that may change everything as far as the dynamics. But in general, if China is able to stave off kind of an economic weakening or any kind of recession, that should be good for commodity prices on the whole.
What about high yield dividend stocks? Now, when I was a younger person, just starting out, I took a little bit of money and I put it into 5 different stocks, decent paying dividends, and just reinvested the dividends. And now those stocks are worth a considerable bit more money. Is that, I don't want to call it a safe haven, but is that a place where it doesn't matter which president? Obviously, the stock price could fluctuate, but if the dividend remains constant, you should be able to build your wealth that way.
Yeah, high dividend or let's say high, it doesn't have to be high like 10%, but high on a relative basis, maybe 4 or 5%.
Right.
High dividend yielding stocks, I do think, are a great place on a relative basis to be protected. And is in with the caveat that that dividend has to be sound and stable. There's a number of different things to look at for that, but our profit margins increasing? Is their operating cash flow, more than cover their dividend payouts? Do they require a lot of capex or working capital because they're growing, right? You'd actually paradoxically want the opposite, where they could use that. It's free cash flow. They could use it for dividends. So dividend stocks, you're right. As long as the dividend's stable, then they offer some downside protection because, just put an example to it, if you have a stock that's worth $10 and it's yielding 5%. Well, if that's cut in half, it goes to $5. Now you're yielding, far higher. So it's worth looking at from that perspective. That will attract a higher yield, even if it's just temporary. When a stock goes down, price goes down, will attract more capital to it. So in some ways, I do think it increases or heightens your floor. And the other thing is, people always forget because dividends aren't sexy, but it's nice to be paid while you're waiting for something to happen. So even if it's a stock that you think will appreciate in price, it's nice to get paid while you wait for that to happen. We've seen that recently with a number of areas in the stock market. I think tobacco stocks are a pretty good example. They've had a nice run here during 2024, but that meets kind of all the criteria as far as dividends, right? They extremely cash flow positive. They can meet their dividend yields. It's a slow growth industry. And frankly, there's some opportunity down the road with cannabis plays.
And look, I don't want you to give investment advice, but for young people starting out, and I know you can't give investment advice, but for young people starting out, is this a way to start building a little bit of a nest egg? Just look, if you've got $500, buy a stock, reinvest the dividends, and 5, 10 years, you'll be sitting on something a lot bigger than what you originally invested.
I think it works especially well for that fact pattern, right? Because that's with the caveat that you have to have it in a retirement account. So that's what's nice. You put that in an IRA, well, your real return is far higher than if it's in your taxable brokerage account. So that is a great place to store kind of high dividend yielding stocks or other instruments like that. Definitely, especially being young, look at it in your retirement accounts. Great area.
So and again, we're parking money in these stocks, and not as young people. We'll start talking about people my age again, as a hedge against election chaos. If you can't deal with the volatility of the market right now, maybe a dividend yielding stock is a place to go to just step back and say, look, you know what? Let them bang their heads against the wall with the volatility, and I can still make some money, with the dividend.
Yeah, and I am concerned about some election chaos here. I'm concerned about social unrest, no matter who is elected. I'm concerned about no one being elected. Theoretically, you could have a tie, right? Theoretically, we may not know for some time. So you could have a bunch of lawsuits, so it could be very messy. So I do think, in general, forgetting about the election, everyone should be defensive just based on what economic indicators are predicting. But on top of that, with the election, and what's even worse, some of the policies that have been bantied about, depending on who wins, could be very nasty. So I do think people should be very defensive going forward. So when we talk about areas that should be okay, regardless as to who wins, regardless as to the economy, we mean that more in a long-term perspective, right? Anything could take a dip when there's a recession. Anything could take a big hit. We've seen that with gold. We've seen it with Bitcoin. We've seen it with a lot of safe assets. Whenever there's a liquidity crunch, they all get hit. They just happen to come back a little bit faster.
What are we staying away from, Chris? I know that we're trying to talk about places where we can put our money that's kind of doesn't matter who wins the election, but what are we absolutely staying away from with either candidate, I guess?
Yeah, it's a lot easier to say if you're talking about a particular candidate because they do have areas that they favor and potential tax implications of different tax legislation too. I mean, I think in general, I'd be very nervous just about the broad market. So when I'm talking about what's an attractive area, it needs to be a specific area, like we talked about. Maybe it's AI, depending on how you play that, et cetera. But just being in like a broadly diversified S&P 500 type thing, I do think there's a lot of risk in that. I do think there's a lot of risk in bonds once you go out 6 months, right? Like I could see bonds weakening with continued cuts by the Federal Reserve. Meaning bond yields go down over the next 6 months or so. But then eventually I think they're going to tick higher. And so bonds, you may have to be a little bit more nimble. But I would still look at short-term bonds primarily so you're not hurt, going out with like 10 years or what have you.
Is cryptocurrency something that, I know that Donald Trump was, pro cryptocurrency, but Harris seems to be softening too. Is with either candidate, you think cryptocurrency is going to become or continue to grow higher?
I do, primarily because what you're referring to is more the regulatory framework, right? They may be a little more open or less open, depending on the candidate, to really having a concrete framework for cryptocurrencies. Yeah, I do think that from that aspect, it's each of them acknowledging a reality. It's not one being pro Bitcoin versus this is a multi-trillion dollar, asset class. I mean, it's been around for a long time now, over a dozen years. So this is a real asset class. It's about time you had some real good regulatory frameworks around it. But on top of that, and this is, I think, the biggest thing, if anyone's going to take one thing away from this podcast, or really any of the podcasts I may talk about, I think it always comes down to a solvency crisis for the U.S. And I think that's going to be the biggest issue over the next 10 years, regardless as to who's in office, is a solvency crisis. I think it's bigger than any kind of economic downturn or recession we have, no matter how severe. I think it's bigger than any kind of financial downturn in the equity or bond markets. I think a solvency crisis is because it permeates everything, is the biggest issue facing any administration and any investor for the next 10 years. That's really something we got to be prepared for. And like we alluded to early on, I think the best way to do that is through inflation hedges, because that's really the only way out of the crisis.
Some defense stocks are hedges against these things. AI and the tentacles of AI. It's not just okay. You know what? I'm going to buy Nvidia stock, but like we talked about, there's energy. There's commodities that are tied to the way we make AI peripheral stuff, whether it be chips, racks, cooling towers, or what to keep this stuff cool, energy, all this stuff. These are hedges against inflation. Are all these things, if we end up in a solvency crisis, and that's kind of scary, are these things places to have your money parked, or is there someplace else that we want to think about in a solvency crisis? Because look, a solvency crisis would mean that the dollar has really dropped, and it probably isn't the world currency any longer.
Yeah, it means people who own bonds have a real concern that there's real creditor risk right now, because bonds are priced on a large number of different factors. One of them is creditor risk. That's never a concern for U.S. Treasuries. I think it will be a concern down the road. The things you mentioned, I think they should do well over the long term, regardless of what happens. But like I said, a solvency crisis permeates everything. As far as kind of like a category one or priority kind of inflation hedges, what's really going to protect you when they try to inflate their way out of this solvency crisis? I I think you got to go to the old kind of the old playbook, and you look at precious metals. Gold and silver right now are both up, let's say, over 60% of their lows over the last 5 years.
Mm-hmm.
They're reaching, all-time highs on a relative basis, the last 20 years, what have you. I think they're great places. I could see gold going quite a bit higher and silver. Um, that's one area. Look at any other classic inflation hedges. I think cryptocurrencies, Bitcoin, any kind of monetary substitutes like a Bitcoin is something to look at for what's coming down the pike. I would look at any great exporter. So we saw this in the 1970s when you had U.S. dollar inflated quite a bit. It becomes our products become cheaper for foreigners to buy. Farmland took off. We had farmland exports went through the roof in 1970s. So I think farmland could really benefit from that, or any exporter on the international market with a commodity. Real estate is a classic inflation hedge, in part because it's uses a lot of leverage. Anything that uses a lot of leverage, if you're able to structure it correctly, and if you have inflation, you're making money on that debt effectively, right? It's decreasing in value from the inflation. So real estate's always been a great place in inflationary times. I would just caution that you definitely want something that would be protected from an economic downturn, meaning you don't have to worry about tenants. Well, you want tenants, but you don't have to worry about low occupancy rates, what have you. So I would look at things that have a proven track record that could withstand some other real estate trends, like you mentioned, office space. It's obviously a very negative trend that's been going on for some time. But those are kind of your classic inflation hedges, which I think everyone should look at. And everything else we kind of talked about, I think, are areas of opportunity. It just depends on how things play out.
I was talking to somebody earlier this week about cryptocurrency being a store of value, kind of like gold. Do you see that changing where it becomes more of an equity?
An equity in the sense of having greater upside.
Yeah, and maybe we're using it more than just. I mean, your gold, you're buying it and you're holding it onto it, and there really isn't. You're not walking to the store with a bar of gold and saying, "Hey, you know what? Give me a quart of milk or a half gallon of milk." Do you see a use for it down the road other than it being a store of value?
For actually transactional, like actually being used as money. Absolutely. And I think we've seen that in areas that have what I would call financial repression, right? So whether you look at Zimbabwe or China, you saw this in China with people trying to get money out of the country. Um, and that's why with Bitcoin, you could chart the disparity in prices between something that's local, right, in Zimbabwe versus how it's traded here. You're going to see a very big difference. Nigeria had the same thing. Um, I don't know what that time period is, but
Right.
I do know that people, because we've seen it in the past, will view Bitcoin as an inflation hedge. I think it will be kind of a safe haven in a solvency crisis issue. As far as its adoption as a monetary usage, I don't know. Things could change very quickly. I mean, it's already being used theoretically. You could use it in El Salvador, right? Which people may laugh at because they consider it like a, the backwater country. It's in the middle of nowhere, but uh, it doesn't take long for adoption to spread.
So those are a bunch of places to hedge against inflation and I guess deflation as well. But we'll continue to monitor the presidential election as we get closer. I guess it's only 60 something days away at this point. So we'll keep leaning on you to tell us where to put our money and to be safe. Chris, where can we find you guys? I know windrockwealth.com is the website. There's a bunch of research for our viewers if you want to go there. Anything new coming in terms of research soon?
Oh, we're always trying to put out some material, so it's always worth visiting our site. It's a research tab under windrockwealth.com. And everything that we do, whether it's speaking or writing, we always push out via Twitter or X as well. So feel free to find us on there as well at WindRock Wealth.
Yeah, I still call it Twitter. To me, it'll always be Twitter. It's hard to say, oh, we put it out on X. It's like, okay, X was always a variable when I was in math class, but I still call it Twitter as well. Chris, thanks so much for joining me. I really appreciate your time.
Thank you very much, Andrew. Appreciate it.
Thanks so much for watching our discussion here on Wealthion with Chris. If you need help being financially resilient and would like to speak with Chris or one of our other RIA partners, please head over to wealthion.com/free for a free no obligation financial review. And of course, if you could like and subscribe to the channel, we greatly appreciate it. Don't forget to turn on notifications so you know when we post new videos on the Wealthion channel. And please do the social media thing with us. All the links are right below in the description. And if you like this content and are looking for more ways to achieve long-term wealth, watch this video next. Thanks again for watching. Until next time, stay informed, be empowered, and may your investments flourish.